Hello and welcome to Options Guy TV. My name is Brian Overby. Welcome back. A long week. I've always enjoyed the Thanksgiving Day holiday. That little half day we always have on a Friday is always interesting day. Hope you got a lot of good solid turkey in you and watched a little bit of football. That's exactly what I ended up doing this entire weekend. We're gonna end up, the market started off rocking and rolling at the beginning of the week. We got a few mixed in the mega cap tech stocks, and I do think that there's going to be a lot of volatility, and especially with the way that Nvidia is trying to do deals, and it's like all of them are trying to get together to build this one ginormous gaggle of mega cap tech stocks. And so we saw that today with Synopsys. Synopsys is a little bit of a smaller company that's based out of California. And NVIDIA came in and did a deal, and it has to do with business to business and building chips and building processes. And they bought, I have it right here, $2 billion in the company, and that turns out to be about 2.6% of Synopsys's total shares. NVIDIA is down today a little bit, which I do still think is a buying opportunity. We talked heading into the holiday, we talked about selling calls on a lot of your positions, some of them that maybe you want to sell, some of them that you just want to gain some premium on, some time premium, especially on the deep in the money call options that we have been looking at recently. So NVIDIA is at 75.99. It's down just a smidge. It kind of went down on the Friday after Thanksgiving. And now we're in Synopsys. Synopsys announces earnings on the 10th of December. And I really want to do this trade. And I looked at it this morning, and I've looked at it a couple of times. But I do think that NVIDIA is going to be a big partner with them ultimately, even though $2 billion is like me spending $4 on a cup of coffee at Starbucks, but to NVIDIA. But I do think that they want to go down that road. And I did listen to they had the CEO of Synopsys and Jensen from NVIDIA, and they did just talk about how big AI is going to be within the industrial space and how it can reform the processes. And when we get to that level and AI is truly helping out and trying to get to the point where you're 100% accurate on your engineering and how things are made, how big of a deal that's going to be across the world, the globe. So it's scary. It is, because efficiencies usually come with job losses, and that does kind of scare you about the workplace. But who can ever guess what's going to happen? And you're not going to stop it, right? If you try to stop it in the U.S., China's going to thrive and develop it. But because it's like a weed, it's just going to keep growing. There's really not much you can do besides embrace it, and the rich get richer, and that will happen. And so here we are. And Synopsys, I think, I'm going to trust NVIDIA's investment, and I'm going to assume that they're earning, Synopsys right now, it's SNPS. Let's run to the Tradier Pro software. And I'm going to show you why I just kind of slowed down on this. And I'm really surprised to see this, because Synopsys has been in the news quite a bit and all that. But looking at the open interest, there's just no open interest in these option contracts. So I wouldn't want to buy an option outright. I mean, I'm looking at the December 12th, which is the earnings, looking at the $445 call option, and it's $4 wide. Man, that's tough. I guess we can fill at the midpoint, but is the midpoint really, is that value? Is that where we need to be at? Because you're looking at $4 wide here at the money. Man, that's a tough one. Let's look at the December 19th one. Yeah, interesting. So the 445 is trading at 1950 on the ask, and the 1940 is 23 on the ask. Okay, so this popped up on my radar today because of the news. And let's do it. Let's look at this trade. This is a paper trade. This is $2. We got 605 open interest. You're looking at the 500s. That's where the bulk of the open interest is after the earnings. I kind of want to just get long going into earnings. I'm assuming that the earnings report will be good, but who knows if it's good that will actually make the stock go up, because obviously we got the pop right here with the 3.6%. And if you look at the chart, it's mountainous. I mean, you're talking SNPS. Oops. I mean, this would be a climb all the way up to the precipice and then boom, all the way back down. And now here we are today. So the chart is kind of hard to even grasp much from because of the huge gaps and the jumps around and everything that's involved with it. Let's move it over a little bit. Here's the 200 days in green, big death cross there, coming back, bounced up to the 50, hanging out at the 50 right now. This looks like an area of congestion a little bit right in this range, right? We showed some area of support 1, 2, 3 times before it bounced and took off. Came down close to that. We actually broke below it. Yeah, it's hard to discern anything from what's going on here. It's obviously very news based. Let's do the trade. Let's go. Let's give it a little bit. I'm not going to use the earnings. I'm going to sell something short term to pay for something long term. So we're going to look at this is the 605 open interest. This is almost $1 wide. That's not insane. And we got to do a spread because we got to try to give the market makers two sides of this trade. They're obviously nervous about what could happen as we get into earnings. These aren't horrible markets. These are $1 wide. These markets are horrible, 20 by 24. So let's do the 450s, and then we're going to sell. This isn't for the faint of heart, but what did I? 450s. We'll sell this one. And then we're going to sell the short term. Now, this expires before earnings. So I've got to get rid of that. I got to go back here. 450, we're buying the 605. Yeah, we're going to buy that. 15 points higher. That's what the move was today. Oh, it's the only decent option. I kind of want to get tighter, but 2 points. Yeah, I got to do this one. And then we're going to sell something just out of the money. Okay, so this is a vertical spread. We're buying the 450, selling the 450, 250. So you want the market to go above 450, 250. So if you're looking on a vertical platform, you're buying the lower strike, you're selling the higher strike. But we're going to do it in different time frame. So this is an actual diagonal, is what they would call it on the floor. You're selling a shorter term higher strike, and you're buying a longer term lower strike. We're going to bring in this. We're going to try to capture as much of this, let's call it $2.50 as we possibly can. And that's going to help pay for this expensive option contract as we go into that earnings report. Now, after the earnings report, we could sell another one of these. We got this 11-day. There still will be some volatility premium, but the vol isn't insane. We're looking at 66 versus 54 heading. I actually expect implied volatility to go up, and this could continue to head into earnings. Now, there's a very good possibility that we don't even ride it to earnings. December 12th or December 10th is what day of the week? December 10th is a Wednesday. Okay, so we can look at it on Monday and maybe close it out on Monday. uh, because this option contract's going to expire on Friday. Well, we can even look at it on Friday, see where it's at. So that's what we're going to look to do. That's what we're going to look to do. And ride this up. We're expecting implied volatility to go up on this option contract, making it more valuable. And we're expecting implied volatility to go down on this option contract. Now, some people might sell the 450 and keep it equal. And that in that case, though, if you do that, I'm a little bit nervous about the stock jumping. And if that happens and you're right on the 450, it's hard to make a profit on the December 19th option contract. So I'm going to give it a little bit less delta by going to the 450-250, and we'll make it a true diagonal spread. But I like this trade. I came up with it this morning, and we could be out by Friday. Yeah, let's look to do it. I expect the vol to go up here. So like if you even look back on the December 25th and the January, we got earnings coming. And we got major news that just happened, and we're trading at a 72% implied. Historical is 54 going out to here, 63 here with the historical at 54. I'm kind of surprised this isn't trading at over 100% implied. It's not that I trade Synopsys, and it's, been on the radar since AI. I didn't even know the name of the company, 5 years ago, basically. Never even thought about it. Wasn't even in the purview. But yeah, that's going to be the paper trade. Let's send it to the what if calculator. Oh, I drew a nice little profit and loss graph. That's perfect. So this looks a lot like a butterfly. Some people call it the poor man's butterfly because you're only dealing with two options. Much bigger dynamic. On Friday, you got to be awake. You do not want to be assigned on that short call. And if you go into Friday and that call option has a chance of getting assigned, the brokers are going to do something. The brokerage firm is going to make sure that you don't get assigned on that short side of things. And you don't want to. So if the market goes up and it hits that short strike, by Friday, we're just going to get out of the trade. That would be a huge move to the upside. It would be double the move that it made today on this major news, right? So that would be a huge move to the upside. But if it does come up there and it hits this strike, this is where it looks like right now. Our profitability, we would be up $452 according to this number right here. $452. And then if the market goes all the way up and we hit this strike at expiration, we would be up $963 at expiration, which is this Friday. Now, if it goes down, we can just remain long the call if we want, and we can ride it into earnings. But one of the biggest things, and this is the way I like to set these up, is we expect implied volatility to go up. So if the market does go down, first of all, that pumps up implied volatility. And then on the call option, we have an earnings report that pumps up the implied volatility. So I'm expecting that back month option contract, the 19th, that even if the market goes down, that call option, there isn't as much risk as you might think. The biggest risk to me is the width between the bid-ask spreads. That's an issue. That is a big issue, especially if we remain just long. So I kind of want to put this on as a spread. I kind of want to take it off as a spread. So I'm kind of hoping that we get to move to the upside because this is a decent risk. We're going to risk $1,475 for the potential to make 1,000. Now, if the market just stays where it's at, we're going to be just fine too. If the implied volatility goes up on the back month. So the only real risk is if we get to move to the downside right now. That's the biggest risk. A gap open that would bring, a 30-point gap open in it. That's going to put it all the way up to 480. But man, I just wish the bid-ask spreads were tighter. It's my only issue with this. But that's going to be our paper trade. That's our paper trade. So we got earnings on December 10th and in Synopsys, and yeah, that's where we're at. California-based company. So let's go and check through a few of the stocks that we did some trades on. So Google is down a little bit today. There's just a lot of headlines that are coming out and people are trying to guess, oh, does this mean that Gemini's bad or does this mean Gemini's good? Last week we got Meta and Google doing a deal that Meta's going to buy some chips. So from Google, which is Broadcom and their operating system. And because of that, Google went up and NVIDIA went down. And that was the start of that. But and then all of a sudden it seems like people have already forgotten about that. And then the news headline comes out today in the Google space about another company having a better AI engine. And maybe it's going to threaten. So like the news is just all over the place on these stocks. So you just kind of filter out the noise. Google's making advances. Google's going to do well in this space. And like, as usual, the biggest thing about Google is they just don't talk. They don't give away their secrets. They just keep plugging along and they do a very good job of monetizing everything that they have across the board, including one of the biggest things about AI just in general is they have so much data through their YouTube platform. So I like Google. If we sold some calls against our long call position, this would be an opportunity to even close them if it comes on down, because we went out 15 days on them, gave it a very short-term notice. We did the same on an Amazon, and we bought a long call in Amazon, the 185s. Amazon's doing all right today. AMZN. That's up just a smidge. And NVIDIA, let's see where that's at. NVIDIA right now, oh, there we go. It was down a little bit on the open. Now we're up $1.47. So maybe the interview on CNBC between the two CEOs might have driven the stocks higher. Well, all right. That's any questions? Anybody out there? We're going to be short and sweet this week. So we'll come back and look at this trade at the end of the week. It's an earnings play, but ultimately we'd like to get long the call option at a cheaper price. So we're going to sell this near-term premium to pay for the longer-term call option on Synopsys. Well, it's already up from the midpoint, 1475. It's now at 1562, and stock's up 1458. All right, it's going to be volatile, and it's a tough one to trade because of the bid-ask spreads. But let's paper trade it. Let's see where we could get by the end of the week. Thanks for coming, everyone.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.